Bitcoin is crashing, and here's what you need to know. Today, stocks took a massive dump. Leading the market was surprisingly Bed Bath & Beyond and your meme stocks. As one of Bed Bath & Beyond's major investors, Ryan Cohen exited 11.8% position in the company, dropping the stock over 40% and causing a retail panic in the space, especially since he's one of GameStop's chairmen. So why does that affect crypto? The point is that today is a very retail traded day, and there was no major macro data points that were factoring into the market. So we legit just watched market makers drop and destroy all of the long positions on Bitcoin. All the overly leveraged traded positions that people were longing with Ethereum reaching $2,000 were clearly wiped out from market makers today. Bitcoin now sitting at a negative $27 billion delta, we can see that the majority of the positions in the markets are shorts. So what do we do? If you've been watching any of my content, you would know that I believe the relief rally is over. However, still believe we're going to see a lot of crab walking over the next few weeks, meaning prices jumping back and forth. However, that does not mean I'm going to jump in and catch a falling knife. With all the fear, we are entering a weekend which is going to be completely driven by retail traders. So I'm simply being patient. The next big date in the markets will be on the 23rd when the US announces their flash services PMI. Now, what we'll want to see from this is a greater value than what is forecasted. Now, specifically, we want to be above a 50 no matter what. However, it would be bullish sentiment for the market if we do see a forecast and come out better than expected. Now, this is one of the earliest indications per month for the private US business sector and will tell us what conditions they currently are in. Which is why if they can provide enough evidence to support a certain narrative, they can affect the markets. And currently, Bitcoin looks like it can be falling out of a pretty gnarly bear flag. And even though everything from the 15-minute to 4-hour is oversold, we definitely have more room to run down on the daily over the weekend. In breaking our previous naked point of control, our next stop would be around the 19,800 range. And as a trader, this is where I'd be looking to make a position, as while we're oversold, we have too many people FOMOing into short positions, which will want to make market makers push prices up to liquidate and profit off all of these shorts. However, we have a major point of control at the 23,800 on the weekly, and again, that naked point of control at the 19,800. So while breaking these lows is possible, it's more than likely that we do get a confirmation on a reversal over the weekend and see market makers wipe out the majority of these shorts. You have to think of market makers like a casino. All these people using high leverage are borrowing against the lender or the house. And when too many of those people borrow against that position, that is generally when you get a short squeeze and the market makers take advantage of all those retailers panic selling into the market. Either way, as most of you guys know, I did call the relief rally as well as the end, and I do believe we are going to see further downside. All of my long-term trades were closed around the 2,000 range, and I'll be looking to take advantage of potential price swings while we're in this range, but ultimately being prepared to short the market.